Hi everyone, it's Maya. If you've been following my channel, you know that last week I posted my very first video going over where I started in the stock market. And following that, every week I will be posting a video building up on the knowledge that I have obtained and taught myself up until this point. So, if that sounds interesting to you, if you're starting your own trading journey, please follow, leave a comment down below on where you are, and we will get started. So, today we are going over the dreaded topic of liquidity. Now, for me, it took me about 3, 4 months to finally grasp a good understanding of liquidity. For some reason, I struggled with it so much, and it took video after video, lesson after lesson on how to get a good understanding of liquidity. Why it's so difficult to understand, at least for me, I don't know. But my goal in today's video is to hopefully break down liquidity in a sense that you can use it in the stock market and just have basic knowledge of what it is, what it means, and just how to use it overall. So, yeah, I'm going to bring up my whiteboard here in a second and we'll get started. So, what is liquidity? Well, in regards to the market, liquidity is basically where you have resting orders that haven't been filled. So when you place a buy order or a sell order and you're waiting for it to get filled for you to finally enter a trade in the market, before that happens, that's what liquidity is. It's resting money, basically. So let me give you an analogy first. Hopefully this makes sense. So let's say you think of a restaurant, right? You have customers that come in looking to get a meal, and then you have your cooks, you have the servers, and everyone looking to fill your orders. So, on one side, you have the customers that come in looking for a good meal, sit down, eat, and then you have the sellers, the people that own the company, the cooks that receive those orders and cook the meals for the customers. So there are two sides. And at the end of the day, this is all a transaction. You have one side, someone looking to purchase something, and then on the other side, you have someone looking to provide the customer with what they want to sell something. So let's say you have your customer, they come in, they place an order, and you have the cooks, you have the servers that receive that order, and they look to get it filled. And of course, let's say you have a good company, you have a lot of people coming in looking to place orders. Not everyone's going to get their order at the same time. And the people that come in first are the people that are going to get their orders filled first. And on the other side, those are also the people that will pay the company first. So you have orders being placed, received, and filled at different points and times throughout the day. And in relationship to the stock market, that's the same concept. For every buyer, there's a seller, and for every seller, there's a buyer. And you have multiple people coming into the stock market looking to place orders and looking to get them filled. So you have someone who is looking to buy, and you have another person on the other side who's looking to sell. But there are certain levels at which this happens. So certain people may get filled first compared to others. In addition to that, these types of orders are called resting orders. And we also call this a form of liquidity because you have orders that are just resting in the market that are waiting to get filled and they're active. You're in the market, you're not in the market, but you are looking to get in a trade. So that's how I've learned or I've been able to grasp liquidity. And I hope that made sense. So going to my chart. Okay. So going to my chart, we again we have here. So we have liquidity, which can be defined as active orders, also known as resting orders, waiting to get filled in the market. Okay. And on a chart, this may look like, I'm just going to draw a trend line real quick. So this may look like, let's say, oops, here. Okay. Okay. So here we have a trend line, not a very good one. That's okay. So let's start over here on this side. And we see that we have certain peaks. So we have price that is trending upwards. So it's going in this direction. And then you see the same over here where it's going in this direction. And then it's kind of consolidating in this range before we break out and we go in this direction. Okay. And if we zoom in and look at this on a deeper level, as price is trending upwards, you see that there are these peaks. We have one here, we have one here, and then vice versa, you have the same thing on the other side. So we have peak down here and down here. And what's noticeable about these levels are that they're always, not always, but in this case, these peaks are passed at certain levels. So here it breaks at this level, and then up here, right here, it breaks at this level, and then vice versa. Price breaks at that level, and then it also breaks at this level right here. And why is that? Why is it that we see certain levels trending past a certain peak? And that's because liquidity is being swept. So when it comes to liquidity, resting orders, for the market to move to certain levels, there needs to be enough momentum to get there. So how is that? That's by filling orders. So the market likes to target two things. It likes to target liquidity, which are resting orders, as well as imbalances. And in this sense, we're just talking about liquidity. And it wants to target your orders. It wants to fill those orders so that price can keep moving. So when we see, that price came down here, at one point it's filling orders so that it can bypass that level to reach a higher price point. And the same thing goes for here. So it came back, there was a pullback, and then it was able to break to this high. And this pullback right here and here signifies, in a sense, that there is liquidity. So here, oh wait, yeah, that's right. So there's some liquidity right here, right here. Wow. Okay, sure. here, and then you have some here. And all these dollar amounts that I am placing right there are orders. So there might be like stop loss orders or orders to get into the market that price has hit at one point or another. So what we can see is that once all liquidity, so let's say once all liquidity that was on this side of the market has been targeted, the market's now going to start taking out liquidity on the opposite side, on the sell side. So this is our buy side liquidity, and this is our sell side liquidity. So same thing on this side. We see price reaching here and price reaching here. So here and here, and it's taking out those levels. And then once we get over here, so we hit a low when all liquidity on the sell side has been taken out, and price might consolidate for a second if it's trying to generate more orders. People are getting in, people are buying, people are selling. So that might look like overlapping when there's no clear direction. Then you might see price break out, which we see over here, and then eventually go and choose a direction, which in this instance I drew out going to buy side. So I hope that made sense. That is how I understand it. So let's look at an actual chart now. Okay, so here we have a chart, and if you haven't watched my last video on candles and trends, please do that. I'll link it in this video. But for now, going forward, so looking at this chart, starting on this side, we see that there is a high right here. There is a low right here. And we see that at this point right here, price is, let's use white. We see at this point right here, price breaks that and takes out all the liquidity that was resting right here, that was built up in that consolidation phase that I was talking about. And then we see price taken out here. We see it taken out here. And then we finally see this high up here. Okay. So on the opposing side, we see a low that gets taken out here. We see, okay, and then that does make a swing low down here. And then again, we see liquidity being taken out here. Yeah. So all these lines I am drawing are basically just where liquidity is expecting to rest. So like here, we'd expect it. On this that we marked out before, liquidity will be expected all throughout here. we have it here, here at these highs, and up here. And then on this side, we would see it here and down here. So all these areas that I've marked out by like the green squiggly line are where we would have liquidity, from my understanding. In context, I would use these areas to understand, okay, where is price looking to target? Where's it looking to target next? Is it looking to take out highs? Is it looking to take out lows? Like, where would orders be resting? And you usually see that in more significant areas like your major swing highs and swing lows. So up here, I would imagine there's a whole bunch of liquidity up there. I would imagine that there's a whole bunch down here, down here, and down here. And I'm saying that these are significant because it's not like you have a whole bunch of overlapping candles like you see in this downtrend. So this point right here, I wouldn't really see as a significant low, because it's in between overlapping candles, as well as these 2 points. It's more of your significant swing lows. So down here, up here, down here, up here, and so on. So yeah. So that is all I have on liquidity today. Um, Again, that is based on my knowledge of liquidity and what I've learned. If anyone has a different understanding or interpretation of it, please leave a comment down below on what that may be and how you learned it, or even if you have any videos that can direct me to your understanding of it, that would be great. But yeah, that is all I have for today. I hope you enjoyed the video. If anything was confusing or you'd like to get a better understanding of anything else, also leave a comment down below. So yeah, I hope you have a good rest of your day, and I will be coming out with another video next week. Bye.